On today's episode, I'm going to take a look at my top 2 growth stocks for the week, so let's get started. Alright, so I mentioned 2 growth stocks for this week, and these are 2 companies that I've actually bought, but the first company is Workday. So what we're going to take a look at is we're going to do a quick look at the company's price performance, a very quick look at the company's past financial history, at the market, what they do, and just a quick look at the valuation of both these companies and me just giving my thoughts. Alright, so Workday right now is down about 1.5%, but I like to take a look at the companies right now compared to where they were in February 20th of 2020, because that's pretty much when the market started tanking. So compared to then, this company is down about 6%. And we're going to talk a bit about what Workday does, but to me, it's actually, I would have expected a company within this market to actually be up. Right now, market cap for Workday is about $42 billion. So it's not as big as the other companies we normally take a look at, but it's not as small either. And before we take a quick look at what the company does, don't forget to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much, and I truly appreciate all the support. Also, if you guys want to get in contact with me, feel free to post on the comments. I'm very active there. Also, if you guys want to get to know me more, follow me on Twitter or in my Discord channel. I usually post when I buy any stocks there. Again, I'm not a professional, so this is not advice. These are just my thoughts. But like I said, feel free to find me on Discord or Twitter. My information should be down below. And finally, on the comments below, let me know, are you right now what type of investor are you? Are you a growth investor? Are you a dividend investor? Are you just a valued investor? Or are you a mixture of all? For me, to be honest, I'm more of a growth investor, but that does not mean I only invest in growth stocks. I invest in whatever companies I feel can return positive returns for my money. So, alright, that's enough of that. Let's take a look at what Workday does and why I am bullish in this company. So you can find a lot of what the company does is by either Googling or going to their company's website. This one I ended up Googling, and Workday is an HCM. So you might be like, Jose, what is HCM? HCM is human capital management. So what Workday does is a cloud-based HCM suite which provides a single solution for all HR activities. So this is like human resource management, benefits, talent management, recruiting, payroll solutions, time tracking, workforce planning, and learning. And the main reason I'm very bullish in this market right now is because I think right now, again, this is my opinion, we are in a type of era where it is very important for an employee to enjoy their job, right? Because I feel like, especially people within my age group, I can see a lot of my coworkers leaving the company every 4 or 5 years because they become unhappy with that company and they want to experience something else. And for companies to be able to maintain their employees and make sure that they are happy, they need to be able to track something like this. So I do feel like stuff like Workday could help benefit in that, understand where an employee likes and have all those statistics of what the company is doing, their payrolls, their time tracking, and just overall understanding what the employee likes. And overall, again, also help out HR as well with recruiting, talent management, and also have a straightforward place where an employee can find all of this stuff in one location. Alright guys, next we're going to take a look at this company's revenue growth followed by the margins. So right now, revenue growth in 2019, this company grew about 28%. In 2018, it grew 31% compared to 2017, and in 2017, it grew 36%, right? So this is a nice, strong, heavy growing company. It's not as big as the other companies we have taken a look at, but it's still impressive to see companies with the 40 billion market cap continue to grow their revenue by over mid-20%. All right, next, let's take a look at this company's margins. And like I mentioned, after this is the balance sheet. So in the margins, what we want to take a look at is first the gross margins. This is pretty much a software company, so we're expected to see high gross margins. And in the prior year, this company had a 70.6% gross margins, which is pretty high. And we can see throughout the years, it does seem like that gross margins is improving a bit each year, which is another great thing. Another reason I'm very bullish in this company. Profit margins, like I mentioned, this is a growth stock. So with growth stocks, you usually tend to have either a break-even profit margins or sometimes even negative profit margins. And that's the case with Workday. Usually the company right now focuses mainly on acquiring more customers and then using those customers finally to improve their revenue and eventually be able to make money. So this is what we're seeing, right? Profit margins right now for this company is negative 13%. It's a bit low, right? This company is losing money, but we can see throughout the years this company's profit margins have been improving every year, which again is good results and tells me that, hey, this company is growing their revenue and at the same time making sure to improve its margins, which is another reason I'm bullish. All right, so now I'm gonna take a look at this company's balance sheet followed by the company's valuation. And if you guys are new to my channel, I do a different company pretty much every day where I do a very in-depth analysis, a lot more than what I'm doing here. So if you guys want to learn more about Workday, I'm sure I have a video about this, so feel free to check that one out. But let's take a look at the balance sheet. First, let's take a look at this company's liability. Non-current debt and current debt are close to 1.6 billion. We add the 1.3 of non-current with 0.3 of current debt gives you about $1.6 billion, right? If we can see this company's current investments and cash equivalents, which is pretty much all quick cash, this is close to about $2 billion in there. So this company has enough cash to pretty much pay off all its current debt and all its long-term debt, which to me gives it a very strong balance sheet. Next, another thing, this company's huge portion of liability is deferred revenue. And deferred revenue to me is a fake liability. So it is actually pretty impressive to see that much of it actually being in the liability sheet. And it means to me that this company has a very strong reoccurring type revenue coming in. So now let's take a look at this company's valuation. And at where it stands right now, actually, I'm here in Seeking Alpha, and I like to take a look at a forward price to sales ratio or forward PE ratio, depending on the company. Workday, I consider a growth stock, so I pretty much look at forward price to sales ratio. Forward price to sales ratio for this company for 2022 is expected to be 8.7, a forward price to sales ratio of 8.7. In January of 2021, this company is expected to make $4.2 billion. In 2022, it's expected to make $4.9 billion. So that's close to about a 15-16% increase in revenue, which is a lot lower than what we've been seeing. But the 8.7 forward PE ratio, what are you buying right now? You're buying a company that's seeing about mid 20% revenue growth. You're buying a company with a very strong balance sheet. And to me, I'm buying a company that is in a market that I believe is bullish, especially with the way the time is. This is not a COVID-19 thing. This is just the overall era of where job market it is right now. So that is the first stock. The second stock, we're pretty much gonna do exactly what we just did here. So I hope you guys are enjoying the episode. Like always, guys, don't forget to hit that subscribe button. It helps the small channel out so much. And let me know what you guys thought about Workday as well. So the second company is Okta, and Okta is another company that I'm enjoying a lot. This company just reported earnings. I bought earlier this morning, and like always, every time I buy a company, I post it on my Discord channel and I post it on YouTube. So Okta is up about 4% right now. But if we take a look at the past 6 months compared to February 20th, this company has returned a lot of money to its investor, about 40%. And you go, Jose, why the heck did you buy a company that's already up 40%? Don't you expect a pullback? And to me, I'm a long-term growth investor. And to me, I don't really care much about the stock price movement. So yes, this company could be volatile and I can end up getting a lower price point. But to me, usually the winners are the ones that keep on winning. This is a market cap of 23.7. I can easily see this over a 50 billion market cap. So to me, right, I can see in the long term, I'm gonna make money. Again, I could be 100% wrong, but just my understanding of the company and where I see it, I don't want to risk that pullback not happening. Obviously, if a pullback happens, I will continue to dive in based on my analysis of this company. So you might say, hey, Jose, what is Okta and what do they do? So pretty much Okta, the best way for me to explain it is if you're in a video, let's say you're in some form of video editing company and you need to use Adobe or some type of different software to be able to sign into the to be able to do your work. Most of the time, your job has the license for that program. And for you to be able to use that license presence, you either need to be in presence of the company's network, or you need to sign in through so many VPNs and through so many applications and verify so many things to finally be able to use Adobe or whatever software you use. With Okta is pretty much a security-based platform where all your authentication happens at once. So once you sign into Okta, you don't need to sign into 1,000 different platforms. And I think just this is something that might not be needed, but just the ease and the time saving helps out a lot. And like any companies, if they're able to save you time, and that means they're going to able to save you money. So at the end, it's going to be a company worth in having. And it's not only just for enterprises, it's also for even consumers. For example, if there's a company that has multiple applications and you want to have the same logins for all applications within that company, that company can actually just make use Okta, that where one of your users can actually end up using all those different applications. So some of their customers are like Adobe. That's where I got the idea of Adobe. And the second is MLB. MLB also talks, and you can actually check out their website to understand more about their customers and how they use them. But again, just that security, and it also adds an extra level of security to the company. So it's a mixture of different things that, again, I'm very bullish on for just the overall where the market is going. All right, so now let's take a look at the revenue growth for this company. Then we're going to take a look at margins. And the revenue growth in 2019, this company grew 46%. In 2018, it grew 55%. And in 2017, 59%. So this is a very strong growth company. You see that strong revenue growth, but again, we are going to expect those margins to be not that good. So margins right now, let's take a look at margins, and then we're going to look at the company's balance sheet. So right now, gross margins, this is a software company as well. So similar to Workday, we're going to see those strong gross margins. And for the 2019, 72.8%. In unfortunately, profit margins are a lot less than I would have wished. Negative 35% on profit margins. So this company is losing quite a bit of money. But if we take a look at the yearly things, you can see that the profit margins have been increasing over time. And again, with that continued revenue growth, this company can actually continue to grow that revenue, and at the end of the day, be able to become profit margins. And that is the hope as me for this growth stock. Remember, this company only has a market cap of $23 billion right now. So now let's take a look at this company's balance sheet. And this company's balance sheet is, let's start off with liability distribution. And remember, after this, we're going to take a look at this company's valuation. So liability right now, in the most recent year, this company had about $1 billion in non-current debt and $100 million in current debt. So $1.1 billion of debt. And if we take a look at this company's current investment, that's pretty much $900 million. And then cash and cash equivalents of $520 million. This company has enough cash and quick cash to be able to pay off all of its current debt. So again, another strong balance sheet. And deferred revenue, this company has a huge portion of deferred revenue, not as big as Workday, right? I do believe Workday has a better balance sheet than Okta, but Okta is still really nice. So now let's take a look at the valuation. And in the valuation, we're here again in Seeking Alpha, taking a look at earnings. And again, this is a growth stock, so forward PE ratio is not something I want to take a look at. I want to take a look at forward price to sales ratio. Forward price to sales ratio for this company in 2022 is expected to be 22. And that, to me, I consider it pretty high. But what are we paying for? Let's take a look at that revenue estimate. In 2021, this company is expected to make $776 million of revenue. In 2022, it's expected to make $1 billion. So that's over a 30% increase in revenue for the next 2 years. So that's, again, showing the growth of this company. Another thing, this company is only making $1 billion of revenue. So even if a few more customers come in, that can increase this company's total revenue and dramatically drop that forward price to sales ratio. So that's what investors are paying for this growth stock. That huge possibility of growth, a very strong balance sheet, a very strong gross margins. Unfortunately, it comes with a very weak profit margins at the moment, but a very strong revenue growth. And like always, guys, I hope you guys enjoyed today's episode. Let me know what you guys thought about these two top growth stocks. Let me know on the comments below. And next, I think I actually bought 4 companies. 2 of the companies are these. Let me know if you guys want me to do a video on those 4 companies that I bought, or just a quick explanation of them. Feel free to post on the comments. Like always, hit that subscribe button, the thumbs up, and the bell. It helps the small channel out so much, and I truly appreciate the help from you guys.